Hi, everyone. Thanks for joining us today. We're going to talk a little bit about the earning reports. Is it bright in your office today, Jeff?
I was hoping you weren't going to notice. The sun hits me right in the face at this time of day, and
Uh,
I'll have to remember not to record these at 9 o'clock in the morning next time.
yeah, we're not used to you being so bright and shiny. Okay, so back in 2018, President Trump actually made a proposal to have fewer quarterly earnings. So they're talking about now, I guess coming forward, they're talking about cutting them in half again. So what kind of impact do you think that would have on the markets?
Well, it's look, in my opinion, you do quarterly earnings to be accountable to the shareholder. It lets people like us who own your stock to see how your progress is going. Are
Right.
you hitting your own guidance that you're putting out? The argument against quarterly reporting is it's costly. Management focuses on short-term results. They ignore the long term. But don't issue quarterly guidance then. We have
Right.
stocks in our client portfolios where they do not issue guidance. And so, their analysts will still guess what the numbers will be, but I think quarterly reports are very helpful for the shareholder. And that's really how we um, continue to monitor our stocks. I listen to every single conference call. I do not read transcripts. I listen to the actual calls. It's very time consuming, but it's incredibly worthwhile. And so
Yeah.
to eliminate those would mean we're looking at things every 6 months instead of every 3 months. And I think you'd get a lot more volatility in the stock price if the companies are releasing numbers every 6 months.
Yeah. So there's lack of transparency and all kinds of things that is needed for and appreciated on a quarterly basis. I guess the downfall of that would be just it's not cost effective for companies, and like you said, they might gear their attention in the wrong direction,
Yeah,
maybe.
I don't disagree. There's a cost to reporting quarterly, but I would argue there's a higher cost to not keep your shareholders informed because let's keep in mind why you're a public company. It's to raise money in the market. And lots of companies go back to the market to issue stock. But if we, the shareholder, don't know the latest financials, or if we're looking at financials that are outdated, then there may be less appetite to buy stock in the secondary market. So I would argue there's a cost to doing this as well.
Hmm.
But anyways, we'll see what the SEC comes out with. But yeah, I'm not in favor of this at all.
Yeah. Yeah. I think it's important to have the numbers come in on a quarterly basis where everybody is able to, there's lots of pros and cons to it. So I think it's important as well.
Yeah.
Okay.
And if you don't like doing quarterly earnings, you can just privatize yourself. You don't have to be a public company. And then you can do away with all investor uh, requests, questions, and just be a private company then.
Yeah. Okay. Thanks. We
All
will
right.
talk
Thank
to
you,
you
Sam.
later. All right.
Yep.
Bye-bye.